What's becoming apparent to a lot of the market participants is the correlation between all the traditional sources of asset allocation. So when one goes to allocate, and especially in an SMSF portfolio, they need to look at, okay, what are my sources for assets? It typically combines of equity exposure, debt exposure being fixed income of some sort, a property component, and alternatives, maybe some private equity or some unlisted yieldy investments, and then it's typically a cash or liquidity profile. What we're seeing unfold is the correlation between all those asset classes, equities and property, even some of the private equity, they're all getting wrapped up into what the market is calling a risk-on environment. We are in that environment at the moment. The equity markets will tell you, the market in property prices globally will tell you that. And so now as we start to trend higher in terms of these asset prices, what we need to understand is if this moves, we can't have our income part or the part of our asset allocation which is there to benefit in terms of periods of stress. We can't have that correlated to the rest part of our portfolio. So I would strongly encourage investors to look at, when they're investing for income, to look at those strategies that are uncorrelated to those more traditional sources of assets that are wrapped up in an SMSF asset allocation process.